the consumers really see it. And we have a generation of people who don't understand you have a batch to close. Like that's archaic, right? And so even your actual architecture that is built on is broken. So you might as well blow it all up and start something new, really. So that's why they're investing. And she said, that's the first explanation I've heard that makes sense to me. And I was like, okay, good. Glad you get that.
Yeah. Well, and it's interesting because in the beginning, when I was at Morgan Stanley, everybody around me was skeptical. And the way I pitched it to people was it solves the duplication reconciliation problem. There's so much redundancy and expenses in the industry where everybody keeps their own copy of data and then reconciles against each other. And literally there's entire back offices, tens of thousands of people working in the financial industry who do nothing but that. And if you think about it, if you had an honest ledger that everybody could share, you don't need any of that. Yeah. And that is a paradigm shift, no question. And that's why it's been slow. That's why a lot of the enterprise stuff really, truly has not gone as well as people thought, like me in the beginning, that it would, because we were looking at it going, there's so much expense redundancy in the system, we should take it out. But it turns out there are also, there's inertia, there's fear. Those bank IT stacks are, some of them still have COBOL at the very bottom, right? And people are afraid of what happens if we take out, a system and something breaks. And candidly, that's an issue at every one of the big banks.
I think it is. You're right.
Yeah. So they're not interested in rip and replace. They're more interested in incremental. But I think Andreas Antonopoulos says it right, that we saw the same thing in the development of the internet. We saw the walled garden intranets happening first. And then once people got comfortable with the technology, the internet itself flourished. Everybody opened up their systems. Everybody's got APIs now, and it's a giant mesh network. But that's not the way Wall Street works right now. There is a lot of incumbency, but there are also a lot of people who make a lot of money off the existing system, right? So Dole Food case is the example that it's Exhibit A for why the status quo system is broken, unstable, and unfair. And that is, there were 36.7 million Dole Food shares outstanding, publicly traded company. Company was acquired. There was a class action lawsuit and there was a settlement. So all the shareholders were going to get like another $1.25. And 49.2 million claims were filed for the 36.7 million shares outstanding. And when they looked at it, guess what? All 49.2 million had valid brokerage statements. Right? So the bookkeeping systems of Wall Street created 1/3 more claims to Dole Food shares than there were actual Dole Food shares outstanding. That's insane. And
That's insane.
And it picked the pocket of the Dole Food shareholders. That's what I don't understand. I've tried to get prosecutors to go after that because the vast majority of that was nefarious. There were people who knew that the bookkeeping systems didn't reconcile and that they would be able to double dip, that they sold the shares in the final couple of trading days of the company being outstanding, that the bookkeeping systems wouldn't keep up and they wouldn't probably get caught. And you know what? They got away with it because to my knowledge, I don't think anybody's ever been prosecuted. But that's a perfect example. And by the way, I also realized after I figured out what happened, that happens in every single M&A transaction. Every single one, albeit probably not to that degree, but people are getting their pockets picked. And so, the way to get around that is let's go to an honest ledger system. That's why I loved your story about Steve Wozniak. He was hitting on some of those same things.
And I think there are a lot of industries like that. So I have a client who works in the music industry. And when he was telling me some stories that like way back when Casablanca Records, I don't know if you remember them, but he was telling this story.
Course,
yeah, you do. Yeah. So they were telling the story that they were doing this system by which they would ship records, like overship the amount of records to record stores. And then the record stores would get phone calls because that's how the system used to work. Phone calls from the local DJs who weren't sure if they should play the record. And what they would say is, oh yeah, we just got shipped in 3 cases of, whatever the record is. And so then the DJs would go, okay, I guess we're going to play this record that I don't really love, but it sounds like they're being really well shipped. But what happened is that all of the Billboard charts and all of those things were being recorded on shipments, not on what actually sold. And so they could return them.
Yeah.
And so there was no reconciliation.
Right.
Yeah. And it was. And I worked over 25 years in the product industry. So mass market sales, Costco, Walmart, Target, like all of that. And we used to say that, doing business with the office superstores sometimes was like working with the mafia. It was like, if you want to keep your position and at the end of the year, you're going to have to pay for all our ad losses. We decided what the ads were, Office Depot decides what the ads were, Office Max. And sorry, but you're going to have to make us whole if you want to keep your spot for next year. Like that's the kind of stuff that would go on in these industries. And you'd be like, wait a second, did you really ship that much? Did that really happen? Like none of that is being tracked. So I see a lot of industry is ripe for disruption. And I mean, it's not like there aren't already cracks in brick and mortar retail, right? There's like entire foundations missing right now. So, they're ripe for that. So you guys have set a system that is going to be a great foundational for some of these new disruptive entities. Yeah.
All these things, we recognize them as soft fraud, right? But they're legal.
Yeah.
And you gave just a great example of what went on in the music industry. The track and trace companies that are doing this for food provenance, the stories that come out of that, the stuff that's marketed as organic that really isn't, is a significant percentage higher than the stuff that actually is.
And I'm getting really scared by cannabis industry from the stories I'm hearing from people in that industry as well.
I mean, look what's going on with the people getting tainted vape from the street, right? I think this technology can help in the track and trace area, and that's where it's taken off. I'm not surprised that it's taken off there, that those supply chain provenance businesses, because it is technology that can help in that regard. And that really is enterprise. You don't need the truly decentralized systems for that. But in the financial services industry, I gave you the Dole Food case, which was fairly recent. It was a Delaware court case in 2017. But just in 2019, another example of this, just to give you an idea that this is ongoing and very current, is the Uber IPO. The Uber IPO made a lot of headlines because it traded so poorly in the aftermarket, right? It was a terrible IPO. A lot of investors lost a lot of money. I think the stock was down like 20% on the first day. It just happened again with another IPO this week. And I worked in the equities business for a long time, worked on big IPOs years ago. And so IPOs generally didn't do that. They didn't really blow up like that. So my question was, why are they blowing up like this all of a sudden? These big IPOs are trading so poorly in the market. Well, of course, there's an answer. And that is that the SEC in 2017 allowed the investment banks in underwritten transactions to sell more shares in the offering than are legally issued and outstanding. It's called naked short selling. So it's the same thing we're just talking about.
Right.
And I am shocked at this, right? Because the SEC is supposed to be a consumer protection industry. And yet that is, exhibit A, that they are captured by the regulators, or captured by the industry rather, that this is something that the industry wanted because IPOs are really risky. And that used to put a lot of discipline on the underwriters to not overprice them so that they didn't trade down in the secondary market, because if they did, the investment banks lost their shirts. It was a high risk, high reward business. And every once in a while they'd lose their shirts, but in almost all IPOs, the stocks traded up. And that's why, and the market worked. Well, now since the SEC is allowing the 3-card Monte game to be happening, it's heads I win, tails I win for the investment banks, and the consumers are the ones who lose.
Right.
And so what's interesting is when I was digging into Wyoming, I sat down with the president of the Senate, who's an attorney, and he said, oh, there's a Supreme Court case about this in Wyoming. And I said, what? And he laid it out. Sure enough, there was a guy convicted of criminal fraud for rehypothecating an industrial diamond. Rehypothecation is basically taking an asset, pledging it for a loan, and then taking the same asset and pledging it for a different loan. And that is standard practice in the bond market, especially U.S. Treasuries. The average U.S. Treasury is claimed by 3 different people, but there's only one U.S. Treasury, right? So again, 3-card Monte, musical chairs, whatever you want to call it. But in Wyoming, there's a Supreme Court case litigated all the way up to the Supreme Court that says, if you do that, you've committed criminal fraud.
Wow.
And it was a felony for this guy because it was worth more than $10,000. I'm waiting for a state, because most state fraud laws actually consider all the things you and I have just been talking about to be fraud. And yet it's very, very rarely prosecuted. I'm waiting for a state to actually go out and prosecute it in the financial services industry, because it is ripe for prosecution. And some state's attorney general is going to make a name for him or herself by doing this. And good on them for doing it, because that will actually be standing up for the rights of the little guy and mom and pop. And ultimately, we should all stand for honest ledgers. Why are we tolerating dishonesty in bookkeeping systems?
Yeah, I agree with you. I also think it's really interesting that you guys are already having tests of the entities, of the laws, of the things that are going into place. Because, at the end of the day, I think that's where, for some people, limited liability companies started falling apart, So I had an LLC in Rhode Island back in 2000, a little bit earlier that I formed it. And then we moved to New York State and it just destroyed everything that we had set in place. And we should have incorporated because New York State just did not, they had too much precedent set within the state of how they treated the members. And so it essentially messed with our corporation and messed with our company. No. And so I wished I had understood that. Who would have known that these things were going through? You form it and then you aren't always working with the company that you formed it, especially when you move states. And so I should have gotten a new advisor and I didn't know that and wish that we had incorporated it at that stage.